afternoon, everyone. We are back with another edition of Chart the Markets. I'm Mark from Blunhouse Technical Analysis. I'd like to say hello to my friends from FEG Token and SmartDefi.com, and of course our exchange partner, BYDFi. And a link in this video description to BYDFi is available to you, and I would ask that you give it a whirl. It's an email-only sign-up, and every week there will be 2 lucky winners of trading bonuses just by having an account under that name. So here we are. Happy Tuesday, everybody. We have a lot going on in the markets today. And let's start with our good old friend Bitcoin. And we're looking at the daily chart. Of course, this is Tuesday. Last time we were here was a Thursday, and we always look forward to the weekend because by the time this day rolls around, there's been some changes, and you can see there certainly has. And Bitcoin has kind of caught a bid, and it's looking like what now? Where did it catch a bid? In and around these levels that we've identified ages ago. Just simple tagging, connecting tops and bottoms, again, support and resistance levels. And we find weeks, months later, that price is coming back and testing those levels again. And of course, where does this bid come from? In and around the point of control on the volume profile. That's what you see on the right hand side. If you're not using a volume profile, give it a try. Doesn't really matter what system you use to trade. The volume profile is going to show you on any time frame you're trading where the volume has been and has not been. And of course, we know why that's important. When you see price moving into those volume gaps, it can move quite quickly, and those are trading opportunities for traders. So here we are looking at our daily chart with Bitcoin. We still do not have a confirmed buy signal yet, but we certainly had lots of opportunity to get in early. And one of the things that we show you, people always ask, well, when do I buy? When do I sell? When do I buy? When do I sell? Well, we have kind of an automated script to address some of those things. But if we're looking at these daily candlesticks, just kind of pull your attention back down here. See these equal bottoms? They are often areas where you might see a change in direction. Just like we see the equal tops up here telling us that maybe we're going to fade. You'll see it here to the left as well. And then a series of equal bottoms. These ones lined up at one of our previous levels also around the volume profile. So always look to those areas where you might see those big changes in direction. But you can see you had plenty of opportunity to get in even before a daily signal. And now that you see price moving to the upside, what do you think it wants? We know that current price is looking to revisit past. We see this little bit of volume gap to the right, which will allow price to push up into those areas, and we're almost there quite quickly. So do you think it's going to look for perhaps this level up here where it's been seen in the past? Actually is kind of creates its own support and resistance level. So my guess is we're going to want to try and attack that level in order to take it out. If you take it out, what are you looking for next? Previous waves highs. And of course, then you're into pure price exploration all over again. Right? What does this look like on the weekly? A little less noisy, obviously. But look again, where price found support. One of these levels that we identified in May. Now, I'm not saying you have to have 100 different levels on one chart. That's not what I'm suggesting. These are here just to kind of illustrate a point, but they are accurate. Right? So using multi-time frame analysis, you're going to see price basing off this past level. So you're going to be looking for opportunity there. And, here you go. You're at least going to try and take the top of the previous month, or week rather. But you have a long way to go before you would produce a buy signal, because even with this impulse up, you haven't had enough energy yet to change the trend. Doesn't mean it's not coming, but it hasn't happened yet. But it certainly has shown you what it's got on the daily, but it again hasn't printed a signal. Is that problematic? Not necessarily. But if it doesn't print, and you say, like, for example, you get one of these big red candles to the left with an equal top, what would that signify? Perhaps it's going to fade, right? So those are the things you're going to look for as this progresses, right? But you've got a nice pop today. You're up 2 3/4%. So it's a bit of a recovery day for the Bitcoiners. But the other thing I'd like you to notice on this chart, I'm just going to go to the spot chart because we don't have it all marked up. You have the lower value range and the upper value range, those two thin blue lines, created a very, very, very consistent range for you to trade, because there's three areas that you're going to pay attention to. Obviously, the upper value, the lower value, and the point of control. Look for, I'm always looking for short opportunities at the top of the volume, upper volume profile thing, level, and long opportunities at the bottom of it. But keep in mind, they don't always roll over and die. Some of them blow through. So you have to be obviously prepared for those. But it creates, so now that you've been tracking price effectively, and plus, you've got all these ranges to work off of, you're also trapping price within certain levels, and you're going to trade it accordingly. So if you're looking at the daily, let's say you want to short this top at the upper value range, and if you're just working off the volume profile, you know that price is ultimately attracted to these levels. There's your reversal, there's your signal entry. All this divergence between the T line and the 5 EMA open up, and that's telling you that your downtrend is happening. There's your flush candle. Notice the two equal tops. That gives you your, don't get freaked out by this. If you get stopped out or scared and you want to close it, then you can close it. But this following candle gave you a great opportunity right after to re-enter. And again, you can do that because the divergence between these two levels, the 5 EMA and the T line, is holding. And that's the beauty of this. It's so bloody simple and it's quite visual. Right? And it's all there for you guys to use. And how do you find when things might be happening before they start happening? What do? We shorten up our time frames. Look to the 4 hour. Sometimes, this was a pretty parabolic move, so you might not have gotten an early entry, but sometimes you do. Let's check the 1 hour. Now it's all parabolic. But that's how you're going to find those. Right? You're going to find them by shortening up those time frames. ETH, not quite as dramatic. Right? Not quite as dramatic, but still the same kind of play. What you hear is my standing desk moving up and down. So here you go. You got the 5 EMA and the T line coming together on that daily chart. So that's telling you, as it hooks upward, that you could be getting a change. Notice the swing. It's like a fish hook or a J. That's your clue. Things are changing for the better if you're long, right? Where's your vulnerability to the downside? Look for past price. Look for the bottom of these candles. Look to where the wicks are. Look for areas where you can connect that past price that creates support and resistance levels. So in and around that 3,700 level, you're going to see that. You look to the left and you're going to see that kind of arcing top. And you're going to be able to line up price in and around the bottoms of, the candles from, let's say, a week or so ago. And these are all really important. Just like we did on the Bitcoin chart months ago, it gives us an edge so that we know where the heck we are at any given time. We know where price has been, and ultimately we want to get an idea of where it's going. That's what this does. And if you wanted to shorten up, like, hey, do we get here's some equal bottoms. There's your buy signal. You get lots of opportunity in there as you see it start breaking what? The T-line and 5 EMA, the point of control heading towards the upper value range. Again, tagged it down here, the upside on the 4-hour upper value range, the low end back down. Where do you think we're going? We're probably going to try and test it again. Look to the right where price is on that 4-hour, right? What do you see? The volume gap. What happens when we get in there? Price moves up and down quickly, as you can see. So, but we know where our range is. We're going to ultimately look to take out, we've done this previous waves high, here it is here, and we're taking that out. So just look to the left and look for the next one. And then where is it? Right at the upper value range. You have 3 choices for price, up, down, and sideways. So when you get here, you're either going to blow through that level, get rejected, like you did here, or maybe you chatter along it for a little bit until the market makes up its mind. And that's the chop that you don't necessarily want to trade. You want to watch for those breakouts and breakdowns. If we look at BNB, which was just moving up like a house on fire, it's had some volatility. Like, look at that wick all the way down to 825 or 30. It's a big dip. But what happens? Look at this M pattern. We talk about this all the time. You're going to see things on your chart that create patterns above and beyond just price candles. And you guys know that I love the T-line as a filter. I love the 5 EMA as a trigger, and it does act as a filter as well. But this here, I think we actually talked about this last week. M's are murders. W's are winners. So if this was a price line, people would say, oh, that's a double top. Well, it's 2 equal points in price, which I guess you could characterize as a double top. But technically, price has to fall below that center channel level before it would be considered a quote-unquote technical double top. But we talk about having the ability to trade without the candles using our system. This is a great example. 5 EMA goes from white to red. You can see this pattern unfolding. And then you get your signal. All this divergence opens up. So that's the safe entry. This is the cheater entry. You get to pick, big boys and girls. What's price looking for without even having the candles on? There's our upper value range. Here's our point of control, kind of where price struggled. It's rolling over. In all likelihood, it's going to be drawn to this lower value range. Throw our candles back on, and you can see that price is trading below the levels that we use to determine trend. These are the candles that you hope are the transition candles to change your trend. What do? They got big wicks at the top, so you know that's price being pushed down, and the closes are all below the 5 EMA. That's bearish. So you've got these, three candles that test. Not one of them can close above the 5. Not one of them can close above the T line. And here you are now struggling to even break the T line. That is not bullish. Somewhat of a bullish recovery, yes, but does it change trend? No. And if this is a failed breakout, what happens, guys? Price rolls over and will, in all likelihood, come back to that previous wave's low. And if it doesn't find support there, you just kind of keep looking to the left until you can find areas where maybe price has based out a little bit, possibly in here. But again, it's going to be drawn to that. And if you break that to the downside, this is a nasty gap. These volume gaps, think of these big parabolic candles up and down as just being filled with fairy dust and air. And when they come back to get retested, there's nothing inside them to try and hold price up to the downside. And, it could sink into that area really quickly. And conversely, if it was the other way around, price could shoot up to it quick as well. So just be very aware of where price is on your chart and how it relates to some of the other technicals that you're using to monitor opportunity, risk, and so on and so forth. And again, we shorten our time frames up, and we can see on the 4 hour, that was your big signal right up here. Look at all this chatter. Just can't break the upper value range, and then there you go. You get those two skis, one green, one red, equal tops. Price rolls over. Once you've seen this a handful of times, it's kind of hard to unsee it. Right? It just is. But right now, most people are having a better day. Especially Bitcoin, right? Bitcoin's having a much better day than some of its friends. But keep an eye on the downside risk with kind of coming back to the point of control. And then the upside is to the upper value range. And to add a little more context to our chart, where else did we find support? What else was in here? The 200 MA. So we just kind of show you how to play it just using the 5 EMA and the T line and the script. But now we're adding a little more context by adding some SMAs, 20 SMA, 50 SMA, and 200 SMA. And yes, I understand that these are EMAs. Right, so price bounces at the 200, and you could say, well, it wasn't exact, or it wasn't exact off the POC. Well, this isn't pin the tail on the donkey. This is get you close to the place where you can monetize the chart most effectively. What when you see price come back down here is that you're hoping the POC is going to be some support. You're hoping the 200 is going to be some support, because why? Is it the first attempt on this time frame that it came back to revisit it once it breached it to the upside? Yes. Right? Here's your breach. Going back to Tuesday the 22nd of April. You broke through the 200. That's the most basic bull bear indicator that we have on any time frame. So now this is characterized as bullish. Price moves higher, gets the first touch support that we expect, because the first touches have a higher probability of bouncing, or at least finding support, which this did. And the longer the MA, the stronger or higher the probability of that sticking. So the shorter time frame or shorter MA you go, there's less strength to it, but more strength to the longer time frame or the longer time measure. All right. So you get your first touch bounce off the 200. And why are we doing this? Well, one of the reasons we do this is to take the chaos out of daily price activity, whether you're trading or investing. So if you're looking at this chart and you've been with us for more than a day, you're expecting on any time frame the first attempt of a major moving average is going to get some support. That has a higher probability of that happening. Can it break through? Absolutely. But it has a higher probability of getting support, which this does. Now what? Right now we're going to test the 50 with the same concept. This would be the first touch of the 50 since we broke it back here on the 14th of October. And of course, price is looking for where it's been before. How do you know where price is going to go? Well, no one really knows exactly, but in all likelihood, it's looking for past price. Current price is looking for past. That's what this level is through here, where you found support. It's past price. And right now, we're looking for past price again in the form of either the 50 MA that it may want to tag, or if it has lots of energy, it might even want to tag the 20. When you're trading long, what I would just love to see on a candle like this that's close to tagging the 20 but not quite there, I'd love to see it hit it, or go through it to show that it wants it. I don't like the fact that this one just kind of sits here shy of it. That makes me a little nervous. So I will kind of watch that. But that's what I believe it wants up in here. So the 20 and the 50, and then if we look to the left, see this up in here and all this, it wants that. It's going to look for past price. So once it takes this, it's going to look for this, and then the previous wave's high. And it's kind of rinse repeat. Now, we have more than one option for price. There's sideways, which I don't think we're going to get too much of. But if there's a rejection, that's the third option to the downside. Where do you go? If you fail this level in here, whether it be the 50, the 20, or something like this, more structural, if this fails and it's going to come back as it's failing, what is it looking for? It's looking for past price, a place where it has sat down before and rested all through here. Right back to where the neighborhood of the 200 MA is on the daily. But now you're not looking at a first attempt, right? Like, okay, tagged once, bounces, rejects at this level, comes back to retest. Is it the first test after that? No. Right? So you have a higher probability when that happens of a failure. Doesn't mean it will happen. Those are just how the probabilities of that playing out will look. So this is going to get really interesting in here. This is going to excite a lot of longs. But we don't have any, we don't have a confirmation on our chart yet of a buy signal while we have this resistance up here. And we know that there's an element of risk when you long into resistance, which is really what we're doing if you're in this scenario. Now, if you're doing that, be aware that, hey, you could get a quick rejection. You have to be kind of looking in your rear view mirror, and that's how, and you shorten your time frames up to do that, because you'll probably catch on the 4 or 1 hour a reversal in the making somewhere up here if it's going to happen. So that's, again, multi-time frame analysis, fractal analysis, fibs, fractals, and filters. And if we want to have some fun, and I have not done this, so we're just winging it, let's take that high and let's take this wicked wick. And where does this put us? Okay, so here, this is perfect. What are you looking for? This is our fibs, right? We've we've attached the swing high to the swing low in this case, because we're trying to find the upside for price after its bottom. Standard, we're looking for 50%, which shows at 114,591. And where's our 50 MA? 113,890. Like essentially in the same neighborhood. And as time and price and the clock ticks today, these numbers or these ranges will probably get even closer together. So if you were taking this swing high and assuming that was your swing low, which kind of obviously that it would have been, you drop this fib on here, trying to find where price might want to go in the future. Well, we're bang on, right? Looking for this 50 MA range in and around up here. And if we get really lucky and there's a lot of energy in the move, there's 618 at 117,221. It's a perfect example of using your fibs, especially on this daily, right? Because if you're trading the shorter time frames and you're thinking of, where you might get a little bit of a break, where price might want to pause for a little while, that'll be up there. So you'll want to know that, know what that level is on your shorter time frames, so that you can identify it going, oh yeah, that's the 50 MA and 50% on the fibs. It might take a little bit of a pause here. Maybe I should take 20% off or something. However you decide to do it. But by getting you in the right place at the right time, it's a lot easier to make those decisions, as opposed to making them when you're under stress or there's all kinds of drama going on in the background. And when you're probably going to think too much or too little and make a mistake. This is the Aster chart. And I find this one, I'm glad to share this one with you guys, because this is one where there's so much talk about whatever this is. I guess it's an exchange or some decentralized exchange, whatever. And the chart doesn't match the hype. So I have a little bit of a disconnect on that, but it doesn't necessarily mean that this chart won't recover. It's essentially brand new. But for as much time as people spend talking about this, and this is why I say all the time, this is a real-time representation of what money is doing, not what people are saying. People are saying this is the second coming of exchanges. People are saying this is the next best thing. People are saying a whole bunch of stuff. But if you're a trader, you're like, you know what? They can say what they want, but this chart has provided nothing but opportunity for the trader. Charts don't lie, right? Real-time representation of what money's doing, not what people are saying. If I go into an X space and people are talking about Aster, when I look at the chart, I wonder if I've left my chart inverted upside down or something, right? Because I'm not seeing it. It's all I see is short opportunity after short opportunity after short opportunity. You gotta love this, right? We talk about this all the time. We just finished talking about it. Beautiful consolidation. Again, not a lot of data here, so we're shortening up our time frame to try and get some flow. Consolidation, you get your sell signal. Right back to the 50, break one level, find the next. Is that the first touch? Since the breakout, yep, what happens? Price bounces, but it's just a temporary bounce. Doesn't even present a buy signal to you. So these are just green candles in a further downtrend. I'll just blow this up a little. There you go. Right. And then bearish engulfing, your two equal tops on top of that. That's an ugly doji, which closes where? Below the T line, below the 20, below the 5 EMA. 5 EMA has already gone from white to red. And current price on that candle is sitting on what? The 50. Break the 50, you fall through the ice. As David Steele Smith Elliott would say, that's an ice hole failure. And you don't want to fall through the ice because it takes a lot to break through the ice again. It's a lot of work. And you must have concrete shoes on because look at the divergence that opens up between the T line and the 5 EMA. And that tells you that the momentum is down. And it's down until it isn't. Now, this candle is going to stop a lot of people out, and that's okay. Right? We're not worked up about that stuff anymore. Right? Those are the things that would drive you crazy before you had a technique and a methodology for you to help measure trend. If you're in up here at 204, and you get stopped out at 183, let's just say, instead of being all upset and mad, just continue to do your job. Treat this like a job. It's your profession. Treat it like that. And it will respect you. The market, the chart will respect you even more when you treat it like a professional. Boom. We've shown this so many times that even if this was the first time you saw this, you're going to be like, huh, that's something to look for. I'm going to see if I can see that again. And lo and behold, like, it's going to show up over and over again. So what's our job? Is to monetize the chart, right? I don't know what this thing is. The Aster people don't send me Christmas cards, birthday cards, happy anniversary, happy Halloween, none of that shit. They don't send me any of that stuff. It wouldn't matter how much I held. Same for a stock. Their job is to monetize X, whatever their X is. My job is to monetize their Y. That's the only job you have, monetize a chart. That's it. Over any time frame. I don't care if it's a monthly or a 5-minute chart. That's the job. Your job is to be able to identify this phenomenon that happens time and time and time again, the reasons why we don't care. What else do we know about this candle? That green candle. Anyone who's been with me for more than 5 minutes is going to say it's the first touch of the 20 since you broke it here. And first touches have a higher probability of what? Failing. How many freaking times do I have to show it? Honest to God. When you see this, pay attention. It doesn't matter the time frame. This is how you print. This is your edge. While everybody else is going, oh, well, it was nice while it lasted, and they move on to something else, because you treat this like a pro, and you have a handful of things that you know intimately, you've already been charting this thing on various different time frames. And you're not going to get hit by something that you didn't see coming. It's highly unlikely. But even if you started this trade on a 4-hour or on a 15-minute chart, because you're using fractal analysis in multiple time frames, you see that 4-hour close, and then you see this equal top and it start to fade with this divergence open, creating a point, you're going to short that thing like there's no tomorrow. Because that's how you make money. You won't even have to think about it anymore. You're just going to hit it instinctively. Right? This is part of the reason why I show repeatedly, I admit, over and over again, what you need to look for on the chart so that it becomes instinctive. Right? And that's a process. I acknowledge that. It's something I still work on each and every day. So when you're looking for reversals or changes in direction, or these flush candles, really is all they turn out to be, and lo and behold, this is the money candle, the one that followed it, in all honesty, which you don't see every day like anything like this. But did you see it? Did we know Yeah, the market will tell us what it's going to do. This is a language. It's based on mathematics. Mathematics is a language. This is a derivative of mathematics, so it's a language unto itself. We show this on every asset, stocks, commodities, crypto, mutual funds, ETFs, everything. Any asset, any time frame, any market. And when people tell you, and this is really something that rings true, let's go back to the Bitcoin chart momentarily. When people tell you, or you hear in your adventures that, hey, we can show you how to make money in any market, up or down. And I was, 25 years ago, the skeptic. Well, how the hell do you do that? I'm just a dude, right? Like, this makes no sense to me. It sounds really hard. So I'm just going to buy long because the market goes up more often than it goes down, and it does. But where does that leave you when the market goes the other way? Right? Lost in a rapid without a paddle, just getting tossed around, hanging on for dear life. And the moment you try and reach for something to make a trade, you get hammered because you have no idea where price is on a chart. You have no idea to determine whether or not your trend is intact. Now, Rico pointed this out last week, I think, when we did a stream together. And he was looking at the monthly Bitcoin chart with our script. Now, granted, this chart goes back to 2020. It's a monthly chart. So yeah, there's a lot going on in each individual candle. But nevertheless, you got a buy signal, at least with the script, back, that's April of 23. And you had lots of opportunity before that point. As you can see, these equal bottoms telling you there's probably a little bit of a base here. And this limits your risk. Right? So if you're thinking, and this, let's pretend this is a 15-minute chart. Right? Where would you consider putting a stop? Probably in here. And you can always move it up as the trade goes your way, but I mean, these things limit your risk to the downside. If you're going to go short here, where would you put a stop? Oh, possibly in here. And then, of course, as price falls, you'll move your stop down and protect your ROI. But the point is, going back in early 23, our system gave you multiple opportunities to get in early on a run that has not produced a sell signal to date. So we're well into 2020, well, we're almost at the end of 2025. We have not produced a sell signal on Bitcoin on the monthly using our system since April, or even before that. Now, I do not like this candle, but the way that we analyze trend, when price pulled back, did the divergence flip and did it, spit out a red arrow pointing down? No. Why? Because the momentum of price moving higher was maintained, and it's maintained by people buying, or buying enough to not let the momentum change. And even, back in here when things got kind of sketchy, price held the T-line. And this is really important, right? Because this ultimately is the guide we're using to determine trend. So yeah, Bitcoin's had its moments up and down over the last several years, but on our script, this monthly chart has really stayed bullish and still is. And I think that's fascinating. So, credit to Rico for spotting that on the monthly, because that's the kind of thing that if you're an investor and your idea is to hold for an extended period of time, this is when this kind of data is really valuable. When is it safe to go back in the water? You guys remember all this, right? When is it safe to go back in the water? Right in here. And our script told us that. So good eye, Rico. I think you're doing your own thing right now, but that's cool. Good eye. And that's why we do this, right? And that's why we come in here every week and we share this stuff, because we all don't have eyes in the back of our heads. Some of us will see things that other people just don't see. Let's look at Solana. Now, just like all these charts got beat up to the downside, are they starting to look a little similar to the upside? Yes. And here's what we want to make sure. That we don't continue to create these lower highs, right? We don't want, you want to try and reverse that scenario. So you have your impulse down, your retracement higher, move down, slight retracement higher, but it's only, like, again, let's throw fibs on that move because we can. No, there's 618, is that what that is? Yeah. So here's 618. And we're starting to show a little bit of a pause. And the point is, you have this big move down, slight retracement higher, big move down, and then the retracement higher, comes back to an anticipated fib level, but doesn't have enough to change the trend. So this is kind of an interesting point in time here, because I'm sure on this we're going to be bouncing around some other major moving averages that are going to help tell a story. And let's just check. And I'm just going to throw on the 20, the 50, and the 200. 200 is being red, the 50 is blue, that's the ice, and green is the 200. So where did we get support? Same like on Bitcoin, right at the point of control, that thin red line on the volume profile, which is good news, and the 200 MA, right? Our most basic bull bear indicator, the 200 MA, and literally you wicked it, bang, 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 price starts to bounce. If you're in a trade to the upside, great. What are you looking for to kind of manage the risk? Well, you have to be aware that you haven't produced a buy signal yet, so this could fade and roll over and take out the previous wave's low. Alternatively, you look for the 20 and the 50 and these structural levels and start pecking away at the next level up, the previous wave's highs. So remember, when you're moving up, you're looking for benches of past price, structural levels, major moving averages, or those previous waves highs, and to the downside, the same in the previous waves lows. And once you start identifying those, you're going to find that ebb and flow of, the inhale and exhale of the market real quick. This is why we do the multiple time frame analysis. Fibs, fractals, and filters. Thin red line is what? Point of control. 4-hour Solana chart. Big impulse up. Next candle. Wick pushing it down, as you can see. And equal tops. Now, this thing's only been lit for like 57 minutes, so there's a lot of candle to go. But we've seen this enough times to understand that this candle is an opportunity to short. And this is not even, this is actually an uptrend. So what would we be looking this candle to do? I'd be looking for it to come back here and test the 50 and the 5 EMA. Because this is your buy signal. You're finding resistance at the POC, okay, fine, but I'm still working under a buy signal. So I'd be looking for this candle to come back and start to test the 5 EMA, the T-line, and the 50. First test of the 50. Hopefully you find support. What you'd love is a green candle, or at least what I would love is a green candle at the 50. I like those. right? Always looking for green candles to buy at the 50. Once you've breached the 50 so that it's not resistance. Longing into resistance is not my favorite thing, and shorting into support is not my favorite thing. So keep an eye on this. Like, we're going to be here for a little bit longer. We'll see where this goes. But just to show you in real time, that's how you're going to spot these things. Right? Those major reversals are going to happen on those slightly longer time frames if you're doing intraday trading. The 1 hour, the 4 hour. If you're going to catch a real meaningful move on a daily, chances are it's going to come off the 1 or 4 hour charts where you see a little bit early a move up or down. CFX, this is another Rico favorite. Shout out to Rico and the XPXPay crew. Another example of, okay, gotta love this. So look at the resistance you get on CFX at the 50, right? So, you know, if you've been in here a while, you're gonna know that, okay, we're very aware that the 50 is our resistance and we're having troubles breaking it. And when that occurs, after several attempts, you just can't break it, you're going to get a move up or down, and it's going to be substantial, and that's kind of what happens here. Right. This almost looks programmed to me. It's too organized, but anyways, rejection at the 50, and everything melts. Right? Sideways, so here's your impulse down, sideways. This will help you manage this kind of nonsense that you get into every day. So let's say you're on the right side of this trade, and you're short. Price goes sideways after the impulse down, and you can see it struggling with the 5 EMA and the T line, and the divergence, although narrowed, doesn't break to the upside. You go sideways to where? Resistance. If nothing's happening in here, okay, you're watching this daily chart, you can see the 20 MA here and the 50 MA moving downward. Still no buy signal, still no buy signal. You're hoping that, these green candles are going to change something and you're going to try and run at the 20. But it's not happening. So what does that tell you? It tells you, A, it's weak. And here, that's pretty easy to see. You start arcing over. Still no buy signal. You come back to a major moving average because, is this the first touch? Yes. Our first touch is more likely to fail? Yes. And did it ever? Now, you had no idea if you were in this for this long, that when you got back to the 20, you were going to fail in a big way. Other than the fact that you're still operating under a sell signal and the divergence is still intact, telling you the trend down, although sideways, was still dominant. That's what it tells you. That's how I've interpreted this from the very beginning. And here we are again. So, fail everything, test and fail. This is, again, one of those opportunities where if you were to get stopped out or scared and you closed your trade, you have another opportunity to get back in. And now what do you think we're waiting for? Maybe after going sideways for a while like we did here, we're going to come back to the 20 and make another decision, either up or down. Yeah, it could be like test, sideways, test, fail, sideways, test, fail. I don't know. It's just a chart, right? I'm not married to CFX. I don't know what it is. Other than a blockchain. I don't care. Here's ETHFi. One of the things I do know about this thing is it's volatile as all get out. And when you drop your time frames down, you really see what I mean. But does it look any different from any of those other charts? No. Absolutely not. Nice gentle roll over here that just goes with velocity all the way back to the 200 MA. Obviously your wick went way below that, but I mean, That's where you base out, right back at the 200. Impulse down, a couple attempts at recovery candles. What happens? You fail. Roll over, take out what? Previous wave's low. And the divergence that we see is still here. So this is still susceptible to more downside on this daily time frame. So drop it to the 4 hours, see if I see anything special. Yeah, I do. This little attempt at the 50 looks like it wants to fail, although it's spitting out a buy signal. So what would happen here? Price is going to bounce between these two levels until it can decide. Most of your momentum indicators are looking like it wants to move higher. Break the 50. So if this gets north of the 50, it's going to challenge the 200 and it's going to challenge the point of control on the volume profile. Those are draws for price. They act like magnets. These past levels are benches. Those support and resistance levels that we connect. Major moving averages, all of those areas, these gaps within the volume profile, just opportunity. That's all it is, just opportunity. And if you guys have any tickers, let me know. Let's look at stock for a second. I know we've had some asks about Eli Lilly, pharmaceutical company. So here we have a daily chart. What's on our chart? 20 MA, 50 MA, and 200 MA, and a volume profile, and of course our script. Looks like a relatively organized moves. The moves to the upside always seem to have a lot of velocity to them. But how do we manage all that stuff? We just break down piece by piece what we see on our chart. Where's price find support? Back down here at the lower value range. So as you're analyzing a chart like this, these are just the little things you're going to make note of. Hey, I've got price basing out roughly the same level. Oh, it happens to be the lower value range. Then you start to see some momentum higher. You don't get the buy signal till in here, but lots of opportunity to move up. And where does it come off of? The 50 MA. Love those moves off the 50. Nice move higher. See all this air? All this. So when you see that, know that it's just propulsion. You can see the 5 MA and the T line diverge on a regular basis. It's intended to do that, to pick up that trend and momentum. But when the candles show up and leave this gap here, that is just pure momentum, and be careful for the fade. And that's what you get. 5 EMA goes red, and then the thing just pulls right back. Actually comes back to the 200 and bounces a little bit. Now you're sitting on the 20. Do you want to fail the 20? No, because look. This gap. That, and you're already kind of sitting within it a touch. So I would be, you're hopeful for support here, but if you don't get it, you come back to the 200 and likely the 50 and the point of control on the volume profile. So even though you got your sell signal here and had a bit of a bounce higher, you didn't produce a buy signal. I think this fails and rolls over and looks for this low at the 200 as a next step. Conversely, it bounces at the 20 and looks for this level in here and the previous wave's high. And then if we look at XRP, where are you? There we go. So here you see your 200 MA. It's kind of bleeding into one of these levels that we've we've identified, and right in with the 200 is the 20. So what's price drawn to on the upside? Well, we've kind of identified this level of connecting areas of past price, so that's there. We have the 200 MA that actually literally gets kind of covered up in it. And then we have the 20. So that's some significant resistance up here on the daily chart. There was your, how did you know? Did anybody know the day before this? Yeah, the market did. Told you way up here a couple days before. So big impulse down, 3 recovery candles that do absolutely nothing to break trend, wick the T line and fade, constantly closing below the T line and the 5 EMA. You start to get a base around the same level as the previous wave, and you get a little move higher. Right now, these are simply 3 green candles that are still within a downtrend. And my concern would be as they start to test these levels up here, because these are the first touches, right? First attempt at the 20 since you broke it. First attempt at the 50 since you broke it. So there's a lot of resistance up there. And if it were to fail, you know, there's a chance, I'm not saying you're not going to get another green candle or two, but if you are to fail and you come back and take out or go to look for the previous wave's low. If you look at the 4-hour chart, like here's this doji that we want to kind of digest on the daily. What's really going on here? How do we look inside this candle? Shorten the time frame, hit the 4-hour. And here we see these 2 equal tops again. So we kind of know what's going on now on that daily doji. We're double toppy a little bit on the 4-hour. Still bullish, right? You've held the 5 EMA and the T line here, but you can see what the problem is. Break this, and then it's another conversation of a different type. But that's how you're going to see what's going on. Like, what's making that stupid doji on the daily? Well, here we go. Just look at the 4-hour, and you'll kind of see. And this is happening in and around an area where there has been some resistance in the past. Oh, but you do have the support of the 20 and the 50 underneath price, which is supportive. So that probably gets you absolutely nowhere when it comes to what your next step is, and that's okay. It's just a matter of time sorting that all out. And the chart will tell you when it's time that it's going to do something. So those longer time frames, that stuff always shows up on the shorter ones. All right. I wanted to look at oil because it's had some crazy moves today. And again, when you fail major moving averages, you have to know that all of that, when you come back to see it on the upside, is resistance. And there's a process of, like, not everything is a V-shaped reversal. It just isn't. And there's a process of, you know, attempting and failing all of those various levels to the upside, and that's a process. It doesn't happen overnight. Now, when we look at the daily oil chart, you know, you can see the breakdown's obvious, but you are starting to see at least a little bit of a base forming. You don't have anything to challenge trend. You know, you're wicking up and testing and then fading again. But at least you're basing, and the bleeding has stopped, at least for now. But does this mean you jump in and buy oil here? Not necessarily. I know that, you know, there's probably a lot of people that would just love to load up when the time is right. I just don't know if that time is now. Because what do we know on every time frame? We know all this is fractal, and we know that current price will look for past price. So here's our daily. Here's our weekly, which we show quite a bit, going back to where we said there's a problem, right back to today, with 61.66 being our target from here. We've explained how that happened, right? So we showed you the daily, we show you the weekly, everything being fractal, failing one level, we find the next. Here's the monthly. It's a monthly chart that probably not a lot of people don't want to look at. That's the monthly. So out of all of the MAs that we use, the 20, the 50, the 200, the 100 is not even worth showing because it's already been breached as well. The 500, which is the pink, and the 1,000, which there's just not enough time here. So what's left that you see that hasn't been tagged on this move? The 500 that sits right here. And just like I finished describing what happens when you have that failed breakout, price rolls over and takes out the previous wave's low. So here we've kind of done that on this monthly, and I believe that we're waiting to tag the 500 MA monthly. We've shown on 15-minute charts, hourly charts, 4-hour charts, daily charts, what you see here. Now we're just showing it on a monthly chart. And we know that in the event of an uptrend or a downtrend, current price is looking for past. And I think that we can build a case that price has found this before many times. So don't think just because it sounds unreasonable, and there's lots of things that sound unreasonable anymore, but just because it sounds unreasonable that price would hit a certain level doesn't mean that it didn't sound unreasonable before and happened before more than once, because it has, and it will probably again. So I'm looking for this level to be addressed. I'm not saying it's going to stay here forever or anything like that. In fact, maybe this proves to be the absolute bottom for this cycle. I don't know. We'll find out. But we're just going to follow our chart. We're not going to front run it. There's no need to front run anything. We're just going to follow. We're just going to use various time frames and an understanding of how money moves. The ebb and flow, the fingerprints of money, that's what we're charting. And we're just going to continue to make calm, rational decisions throughout all of our trades and investments as we use the chart as a means of identifying opportunity. This might look like purgatory on the weekly, but on the monthly, it's incredibly meaningful. Right? And this kind of goes back to what we were saying last session, that you can tell me what the S&P closed at. It doesn't mean anything to me unless I see it on a chart. So, okay, here's the NASDAQ. Oh, the NASDAQ was down 10. Well, what does that actually mean? Well, if it was to close here, it would be creating a doji candle basically at a top, while it's kind of a little far away from the T-line and the 5 EMA. Maybe it wants to pause. How am I going to find out? Well, I'm just going to back up my time frame so I can see what the heck's going on shorter time frames to help me make an educated decision. Look at the love it gets from the 50 on the 4-hour. Right? Bounce, 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 bounce. There's one of these kind of big, expulsion moves up, creating a little bit of air, and price is going to kind of come back and fill that up. But the only way we're going to see is just by dialing our time frames back until we see something meaningful. And you can see on the 1 hour what that resistance looks like. The interesting thing about this chart is that you have this bullishness on this 1 hour. If it holds and carries over to the 4 hour and the daily, well, then you've probably got a runner. If it starts to fade and the T line and the 5 EMA come together, price starts to fall, well, you're going to look to the 20 and or the 50, and then you're going to be looking for areas just like this level in here as support and resistance, as an example. And price will be drawn, in its retrace back to those levels. Here's Zcash. We talked about it. I think we talked about it last time. This is the textbook example of going nowhere and consolidating forever, or which would feel like forever. And then all of a sudden price breaks out. Now, the idea is not to time. We're not market timers. That's not what we do. But look, can you see how price was getting support off a certain level? Basically double bottomed here and just exploded. That's a lot of fun. And look what happens when price goes parabolic. All of these ranges, the MAs that we use, basically measures of time in price, they fan out. The 20 being the shortest, not including the T line and the 5 EMA, but I mean the 20 MA being the shortest out of all of these, is the one that kind of gets explosive first, followed by the 50. It's the next shortest, and so on and so on and so on. And this is how, when this move is finished, and it will finish eventually, and a retrace will happen, you're going to come back and start to check these levels over time. You may come back and tag the 20 and then get a continuation off that level. And price moves up and then, deals with all this up here. Those are the things that you can expect in the ebb and flow of price movement, right? But when you see these big parabolic moves, is the only opportunity to monetize this chart to the upside? No, eventually it'll start to fill in these gaps in the midst of some sort of retrace. May not be a trend change, but there'll be opportunities to monetize the chart on the way down as well. And that's kind of what we're looking at doing. Just monetizing the chart a little bit at a time. That's all we have to do. Take your money when you see it. Don't let it sit there, especially right now, and you'll probably be okay. Let's look at let's look at NVIDIA momentarily. I'm going to throw the volume profile back on because I want to see where the volume has and has not been. So, we've been treading water on top of the 50 with NVIDIA for a while. Blow this up just a little bit. And you can see in here recently it's been incredibly supportive. What I find a little bit sketchy, there's your top. This divergence that we're seeing is still intact to the downside, right? So I'm just going to blow that up. So it's this kind of like a situation where you've got a little bit of a failed breakout, and then we come back and take out this low. But when you do that on NVIDIA, and this will be real interesting for us to track over time, is if you break the 50, this gives you an idea to see how overbought and something like NVIDIA may be. Right? If you break the 50 here and you fall into this gap of identifiable light trading, price can zip down into this gap quick. What's the next level down that it would be looking for? The 200 and or the upper value range. So there is a risk to some downside here on NVIDIA. I just want to see, so this is what, 179, 145. Yeah. So the 50 MA on the weekly is 145. The 200 MA on the daily is 145. What's the takeaway? The takeaway being that if you break this level on the daily, you're susceptible through this gap to the downside of the 200 on the daily, telling us that in order to get there on the weekly, we have to break the 20, which we haven't touched yet. So we'd be expecting some support, right? But the daily is kind of telling us, well, if this does break down, there's a massive gap there, putting this in play at 145. But on the weekly, at 171, we have the 20. So what's 171? I was going to say it's got to be in here somewhere. Basically this level of where the 5 EMA bends around. When it starts to change right in here. So that's this level is the 20 weekly. Let's just drop this in. Is that 171? Something like here. Something like that. So we know that this level is the 20 MA on the weekly. So on the daily chart, if price breaks the 50, we get an ice hole failure, and you see price hitting this level on your daily chart, you automatically know that it's in and around the 50, here you go, or the 20 rather, on the weekly. It's kind of, this is somewhat contradictory, right? Because we would expect it to bounce, but on the daily, if we break the 50, the daily would indicate that we're looking for the 200. So I don't feel good about this chart, actually, if it doesn't get support here. But on the weekly, still a bullish chart, right? Look at the divergence. So we have to go by what we know, not what may or may not be. Just work off what you know. But this is why we do this, so that when we get in these little situations where things are like, well, the weekly says something, but the daily would suggest something else, well, at least you have the knowledge to know whether or not you want to take the risk or opportunity to venture into that trade. Okay. We were asked about rhodium last week, and it's kind of I think this is it. Here it is here. Which is a rare earth metal or something like that. A rare earth substance. I'm not even sure what it is. But even though the chart went bananas, in all of those banana peels, price did exactly what we would expect it to do. It came back to the T line and or the 5 EMA. And, it literally wicked the T line. Why is this important? Because these actually provide you with opportunities, right? You want to be buying when you're close to these levels. You don't want to be doing it up here because price has to come back, or most likely will come back. Okay. Any other symbols that you want to look at? I noticed we got a little soft here or softer as time went on today. So what does Bitcoin do? Wicks the 50, or damn close to it, right here. Where is it? Come here. There you go. And then pulls away. That's not necessarily bullish. So again, is this going to turn out to be a failed breakout? Ultimately just a trade in a downtrend? A trade up in a downtrend, a trade up in a downtrend, and then if price rolls over, you can start looking to the downside for the previous wave's low. It'll use that as a target. And just break down. So there's our 4-hour example again, right? This red candle is no longer a little doji, it's starting to move. Look at this level in here where it kind of wicked and popped back up again, because we've identified it as an area of support and resistance. Price wants to fade here, and what's it going to look for? You're going to look for the T line and or the 5 EMA and 50. And the volume profile is telling us what? Our point of control is literally under this one level. Probably coming back to the point of control in here where it's actually sitting on. So this is still, even though you've got a red candle here, this is still bullish, right? You know, big impulse candle up, divergence happens. You know, you could simply get a pullback to those levels and boom, it carries on. These are meant to mess with your head. The problem is that most people are so bloody leveraged that they can't manage these trades, right? Like deep inside, you're like, yeah, okay, I can wait for the 5 EMA and the T line and see what happens there. If it kicks up higher, I'm good. If it doesn't, I wash it. But because you're using so much leverage, you literally have to make the decision in a wick, right? Well, that's not what you want to do, and it's not going to be conducive to your success. So drop that stuff down a bit so that you can leverage it, or manage it rather, better, and stay in the trade longer, and you'll find that your return will be better. So choice is ultimately yours. All right? Just check the 1 hour for a second. Yeah. Again, there's your upper value range, and this is why, again, we're just using multiple time frames. They're going to tell you what potentially could be coming around the corner. So please, please, please use multiple time frames. This 1 hour, what do? You wick the 5 EMA and move higher. That's a bullish response, right? You've come back, you've tamed these two big candles, you've come back and you've closed off all of this with a wick, barely, I suppose, but you've done that. Price bounces up, and you want to see your next candle open in and around the same level, if not a bit higher, to try and edge and take out that previous high. But just let the chart guide you. There's no bonus points for front running. You usually get kicked in the teeth. There's no bonus points for front running. Just find a time frame that you're comfortable with, that you want to enter on. Sure, drop your time frames down a little bit to make sure you're getting a good entry. And make sure that entry is at, if you want to go long, well, how about pick an entry at the lower value range to go long, as opposed to picking something in here to go long. Or if you want to go short, conversely, pick an area that's toppy where there's been resistance and go short. And then the ebb and flow kind of takes over, right? You're following your signals, you're doing what you're told. You're looking for confluence of different sorts on different time frames. Like, I'm sure if we look at oil today, you're going to see it on shorter time frames. Get rid of the volume profile because it doesn't like it. So here's a 15-minute. Three big daggers down, and then this could be anything. It could be IBM, doesn't really matter. There's your two bottoms, and price bounces. Right? So okay, there's your signal, and you're hoping that things continue on. So you want to look at your next longer time frame now. Let's say we want to look at an hourly. So we've got something going on the 15-minute, and when you see a confirmation on a 1 hour, you're starting to feel like there might be something good going on. You've got confluence, right? You've got confirmation on one time frame, then another. And do we have it on the 4 hour? No, but what do we have on the 4 hour? Oh, there's your signal. Two equal bottoms. So we just went through a 15-minute, an hourly, and a 4 hour to try and establish when price was going to move higher, or if the move we were looking at was going to be short-lived or maybe long-lived. That's what we're trying to find out. So you got this big move down at after this big impulse. The next candle produces a buy signal right away, and now you've got a bullish engulfing candle on the 4-hour, and that would be bullish probably on the daily, right? So those equal bottoms that you started to see as price was basing out even on the shorter time frames, that's positive, right? It's not an automatic sign of reversal. We don't have anything here yet to tell us that we've got a buy signal on the daily, but you can see what's going on behind the scenes, and that's important, right? Let's look at gold real quick. And yeah, that's a big red dagger. One of the reasons I believe these type of candles show up is simply because, doesn't take a rocket scientist to figure out that this was a massive move to the upside. And it really wasn't retraced at all. Like, this is a daily chart. Since this signal went off in August, you've had one instance of 2 consecutive red days. That's it. So in other words, you really haven't had any sort of a retracement to contend with. And what I believe happens is, in this case, you're just going to deal with it all at once, or in a series of what will feel like all at once candles. But at this point in time, if I take these candles off, just to give you an idea, this divergence now, big point, points and flats kind of indicate changes in direction, but this point is happening because the amount of downside pressure is extreme enough that it can just grab this MA and just pull it down. That's basically how that shows up. But this divergence is still intact. There's no sell signal in here yet. This is still all bullishness. So it's going to be really interesting to see how this gold thing plays out. If we do add, again, a little more context to our chart, just by adding the 20 and the 200, maybe price is looking for simply the 200 MA daily. Hasn't seen it in a couple months, so maybe it wants to tag it. And when it does, it'll be the first touch, and it would be more inclined to bounce. Higher probability of bouncing. Coming back and then retesting those highs. On a weekly, I guess this is what I would be talking about on the daily. How price kind of comes back, tags the 20, moves higher, retraces, tags the 20, and continues. See, it did it here as well. On the weekly chart, that massive red candle, or on the daily chart that you saw the massive red candle, and turn it over to the weekly, it still hasn't come back to the 5 EMA. So yeah, it's had some red days. Today's very red. But in the grand scheme of things, when we look at price on a chart, it's still bullish, right? It's telling us that it's still bullish. It says, yeah, I'm having a nightmare. And it just keeps getting worse and worse this week. But I think I'm okay. I'm going to live. I don't see gold crashing or anything like that. And if it did pull back and flip all this to the downside and you come back to the 20, you can see this base here on the weekly of past price that, as time and price move along, will probably align quite nicely with the 50, which would also be the first attempt at it. So there's lots of support. The problem, the why it feels like a nightmare, is because price went parabolic. And when price goes parabolic, the retraces feel awful. They just feel awful. And it literally will feel to some people like the sky's falling. This would be an interesting try and figure out, just throw some fibs up on here. So if I take that as a swing low and I take that as a swing high, we can argue all day long about the wicks and stuff or whether it's exactly the right spot, but it's close enough for what we're trying to do. So we showed the kind of fib to the upside. Now we're going to show it to the retracement side. Where's 50%? Right here at 38.31. And 618 is at 3,700. So if you get a 50% retracement, and in some cases, if the asset's really bullish, it might not even get to 50. It just might get to the 0.382, which in this case would mean it would just come back, tag somewhere in and around the T line and the 5 EMA, and then continue on under that scenario. But there's still lots of support here for gold. If you were to say, 3,700 gold or 3,900 gold, it sounds like a long way away, but it's just because of the ranges have been so extended. But it's just a matter of break one level, find the next. Any asset, any time frame. And we just kind of repeat play, repeat play, repeat play. This stuff just happens over and over and over again. Any other tickers you want to throw in? We did Aster, XRP, Bitcoin, ETH, Solana. Did I miss anything? ETHFi. We did some stocks.
Hey, what's going on, Blunt? Good afternoon, good sir.
Hey, my friend.
Would you mind looking at Useless? I've seen some news on
Yeah,
that
I don't know.
token
What's the
today.
symbol for that?
Useless?
Useless?
Yeah. I
Yeah.
guess it shot up like over 100 million in like an hour in market cap.
So here's a daily chart. Looks pretty crazy. So let's just drop the time frame a little bit to see if we can make some sense of it. So, this would be like riding a wild horse. Like, man, this thing has got some swing to it. I don't know. Like, what do you want to do with it? Do you want to just buy it and hold it, or?
Maybe some like swing trades.
It's really, really, really volatile. So you'd have to be careful if you're using perps. And if you're using perps and too much leverage, it could be a bit of an issue. Here is an example while we're here, though, of what we just talked about, right? We have that big candle up, and then, the candle that was pulling back, you want it to come back because this was so extreme. You want this candle to come back to the 5 EMA or the T line. In this case, it's the 5 EMA, and then the following candle, boom, there you go. As opposed to buying up here, right? You want to let this thing come back to where it's naturally wants to rest and then buy it. And those areas are typically along the level that price will ride up and down, the T line and 5 EMA. And this is why, like, if you're leveraged and you buy up here and you're long and price sinks all the way down here, that's probably going to stop you out or liquidate you. Like, you need to be able to manage these moves. And part of the way you do that is by having to drop the lev, because if you can't manage individual candles in a trend, then there's too much juice. But this thing's got a lot of volatility to it, so you'd have to be careful. And there's lots of stuff you can trade that might feel a little more tameable. But I understand, let me drop it even more. Like, I get if you're using, if you're using the script, it's pretty safe. Like, there's a perfect entry, price goes parabolic. Even in the retrace, you got these 4 big red candles. Did you see them break trend? Nope. It actually looks easier to trade off the shorter time frame than it does the longer time frame. So look at, there's your two equal bases. Signal. You just get in and hang on. Right? This is where you have to make a decision. Do you want to give away this stuff up here? Like, do you feel that confident? Or do you want to wash it and wait for your opportunity? That's entirely up to you. But if you did wash it down here or got stopped out on these candles, there's your re-entry. Boom. And why is it the re-entry? Because you still had that divergence moving higher. So what's price looking for? Previous wave's high. Make sense?
Yes, sir.
Right. Awesome. But it actually does look easier to trade on the shorter time frame. So on the daily and 4 hour, it looked like a bit of a bucking bronco, but this is manageable, right? There's your 15-minute sell signal above all your support. Price breaks through all of it. It's a nice trade. But just make sure you're not using so much leverage that you can't manage a candle, even a green one, because of the volatility or the wicks in an uptrend. Right? Like if you can't stay long in this, that's a problem. You've got too much juice going on. Right? To get washed out here is totally appropriate. That I get. But I mean, getting washed out on these little candles in here because they're wicky, that's not cool. You're giving away money. Speaking of volatility, we haven't charted this in a little bit. Here's Xano. Remember this? Right? This thing's another whipsaw. Right? But the whipsaws still respect the levels that we talk about each and every week. Right? Just take a look at that daily chart. Take a look at all that up and all that down. And it's right where you would expect it to be. In and around the 200, in and around the 50. In price that gets too far away from all of those levels, like if you look to the right, you're going to see price trading well above the 20. That's okay. If you're long there, enjoy it. But be ready to come back and test those levels to the downside, just like you see on this chart where you came back and tested the 20 with some velocity and broke it. Went to the 50 with velocity and broke it. Know that is likely to take place. At the very minimum, the test of those levels. When they break, that's a bonus for you if you're short. Just like it would be a bonus if you were long and they broke through. This is a crazy chart, but it still respects, the levels that we know are relevant. So, I guess the takeaway is don't let the velocity scare you. I think that useless chart actually just kind of brought a little perspective, even, for me. Right? That looks like a nightmare. I look at that and I go, I want nothing to do with this. I really do. Right? Because it's just crazy. But then when I drop it down, knowing that I'm using a market signal to tell me when it's safe, yeah, I think I could take a run at this. Here's what might be happening here, bud. You're going to try and do what? There's that M pattern again. Notice though that your divergence is this is still an uptrend. You're going to look for this up here. And when you find it, one of three things is going to happen. You're going to go up, down, or sideways. But the trend is really important. Right? Here's a big impulse up, 4 red candles. Did the trend change? No. And that's really key when you're trying to figure out when do you get in a trade. Like if you're looking at this 15-minute chart, you're probably going to look at these equal bottoms a little differently now. You're going to see those equal bottoms after that big pullback and that divergence still alive. You're going to be like, yeah, maybe I'm going to take a run at this. This is, again, this is the edge. Right? Knowing what's going on the chart at any given time is worth its weight in gold. Right? Just like this parabolic move up kind of created a bit gap here, and you know that gap's got to get filled up by price. Well, same applies. What we'll look for though is, does it make lower highs on this move, right? That's what we'll look for. But this is a cool little chart, and it might be worth just kind of bookmarking for a rainy day, right? Just go into your watch list. You can click up here on the little dots where it says what you're trading, and just go down and add it to your watch list if you want to do that. And if this was something that I really wanted to trade, maybe I would set some alerts, right? Like, okay, when I get a signal on X time frame a chart, do that. Like up here. So that you get that notification and boom, you're Johnny on the spot. The right place at the right time. And that's what we're really trying to do. We're using the indicator to help you on any time frame establish right place, right time, and then once in the trade, allow you the ability to manage it without too much stress, right? There's your green candle. You know the 50's ahead of you. That's okay. Like, obviously it's there, and you know there's a chance you could get rejected. But this divergence is helping you understand that it's got some momentum to it, and I would, that's some calculated risk that, hey, maybe you're going to break through. Right? Green candles at the 50. Love that stuff, right? But here's your signal. There's your confirmation all in one candle, and price just rocks up. You're just doing what you're told. Doing what you're told. As a trader, you've got a decision to make. Do I take it off? Do I take some? Whatever. Right? As you go through this. But you're going to have a system. But we're allowing the chart to tell us what it wants to do. I totally get it if you wanted to close this trade and wait to see what the next move was. You don't have to give away anything unless you want to. And again, we're looking for the upper value range. That's what that thin blue line is in the volume profile, right up here. And those two tops. Rewind, play, rewind, play, rewind, play. So, interesting chart, but I might take a stab at this just for fun. So, because on the shorter time frame, it looks highly tradable. So, this could be fun. Any more questions, guys?
We got to have some fun sometimes, right, Glenn?
You know what, man? Life's too short. Although, I take this stuff seriously, maybe just because I'm a serious guy, but I love this. And I love doing this with you, with this crew. And I appreciate all the conversations we have when we're not in here. It, to me, is actually, believe it or not, it's kind of a sense of purpose in doing this. I really enjoy it. And I'm glad you guys come in every week and take little bits away. And hopefully it's you're losing less and making more. That's kind of what we want to accomplish. Trade safer. Make sure that you can live to trade another day. Take your profits. Don't get greedy. The money will come. You're going to be better off, taking your profits than trying to let them run for some kind of magical number that may or may not be realistic. And this is a kind of environment where taking profits is a good thing because of the whipsaw, right? Because of the whipsaw. But yeah, if you guys want me to look at anything else, I'm happy to do it. But if not, we will reconvene on Thursday afternoon in and around 12 o'clock. And who knows what we're going to be looking at by that time. Because I don't know if it's just, I don't think I'm the only one that feels like this, but the more this continues, this is YM. Let's actually just look at SPX, which is the S&P. This is the weekly chart of the S&P, and this has been a runaway freight train. And at some time, we talk about these levels that we flare out when you go parabolic. At some point in time, we are going to come back and check these as well. And when we do, it's going to be uncomfortable. And I kind of feel like, is the Titanic literally heading straight towards the iceberg? Like, that's, sometimes things can just be too much, and I think this is too much, to me anyways. You trade what's in front of you, that's a given, right? Here's a monthly of the same chart. It's incredibly organized and structured to the upside. So you have to trade it, right? That's your job. But you're still human, I'm still human, and I do think about these things, and I try and have a macro look. And at some point in time, if we came back to the 50 at 4,900 on SPX from 67, it would feel catastrophic. Shit, it would feel catastrophic if it came back to 5,800 for some, right? And it wouldn't be, right? It wouldn't be. Just like it wasn't the end of the world when you went from 47 to 35. But something needs to kind of correct a little bit, because it's starting to feel uncomfortable to me. I'm okay. I'm a trader, so I'm okay with what the chart does, but you're a human being and you got to have eyes in the back of your head, and now would be a good time to brush the hair out of those eyes in the back of your head and start looking around. So we'll cut this one for now. We'll come back on Thursday afternoon around 12 o'clock and pick this up from here. If you have any questions about our script that we use, please feel free to reach out to me. It is a subscription. It's $99 a month, TradingView access, and it pays for itself in no time. And that's it. We'll see you on Thursday afternoon, everybody.